What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 27th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about what may very well be the first major trend shift we've seen in months, signaling that Bitcoin, as well as many leading altcoins, are likely overbought and looking for a healthy correction to the downside. I not only want to talk about crypto, but we're also going to get into the macro scene, diving into equities, and talking about a potentially similar trend in stocks as well. We've got a lot to unpack here in today's video, so if you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick things off. So I want to start here by focusing in on one of our key momentum gauges here for trading various assets. One of them is our key momentum indicator we discuss here on the channel and we share amongst members within the Dash report. But I always like to let you guys know here what we're watching for in the market. And one of the big things that we always keep an eye on here is our momentum indicator. Now, to be completely fair, I tend to like to lean in towards the weekly time frame for this momentum indicator, especially for longer term trend reversals. But what I mean more is that in the near term, we could be in for a nice, healthy 20%, 30% pullback in crypto markets. And I know that sounds like a lot, but that's pretty common when you're making moves like Bitcoin has over the year of over 120+% or more. And not to mention, in altcoins, when you're seeing much more dramatic price swings, it's very common to see market leaders pull back 30, 40, 50, even 60, 70 to 80%, and then go on to still make great moves. So irrespective of whether or not you believe we're in a new long-term bull market, or you believe that we're in a long-term extended liquidity-driven relief rally with all the excess cash that still is circulating out there since the pandemic, it doesn't matter where you stand. At the end of the day, my point here is that we're in for a near-term correction. So if you've got your eyes on a lot of altcoins, if you've got your eyes on Bitcoin, if you've got your eyes on stocks, I would recommend here, again, not direct financial advice, but to just remain cautious for the time being. And I'm going to talk a little bit today about why I not only feel that way as we look throughout the charts, but also about how you can approach these things. So let's take a look here at Ethereum. Similar scenario here. We've actually been getting a bit more warning signs here than we have on Bitcoin after trending up from around 1550 going all the way towards around 2400 bucks as of its recent top back in early December. We have not been able to make new highs on Ethereum's price and have seen multiple periods of time where we're getting a red trend flip on our key momentum indicator. Again, if we take a look back on the weekly time frame, right, I'm not here to say that it's over for Ethereum, it can't move higher in the long run, but for now it looks overextended. And even the price candles themselves are signaling the same kind of things we saw back in the past, an engulfing weekly candle on the relative highs, and again an inability to get back above there, albeit a little bit more moderate this time than the prior ones in the past. So again, my point here stands that this is, again, maybe a short-term trend reversal. We see this as well in total. When we take a look at total market cap, we've been, again, pretty much flat since back on December 8th. And while we technically did set slightly relative high levels, about an additional $50 billion in total market cap for crypto, it's not too much in the grand scheme of things. It's a very small percentage increase, and the trend is looking a lot more flat here, where most of the acceleration really came in the earlier part of December. This has been mainly led here, especially yesterday's pullback and this retest of the potential pivot line, as we can see here, the dashed red line. Once this gets a close below it, that could be our indicative sign that crypto markets are ready for a cool down. We've already seen that here on Ethereum, and we've seen that on Bitcoin. But when we take a look at some of the plays here that have got people really riled up and have really made a lot of the market cap acceleration, one of those plays is Solana. Now, Solana, as you all know, we've generally been here on the channel not fundamental fans of Solana, but as we all know, at the end of the day, whether or not you like something fundamentally, whether the fundamentals are strong or not, you can have short-term waves of speculation. And again, you're going to sometimes see some really great returns. And I'll be honest, if you bought Solana back in September, which to be honest, not many people did, many people bought it along the way here, but from bottom to top here, relative highs, a 635% move. Not bad if you can get it. Some serious gains here in Solana, right? Solana has been one of the market leaders by performance. However, if we just take a step back here, we can see that this has generally been a range of prior resistance in the past, and failed support. So as price has made not only a sizable move, very much in line with what we saw back in 2020 from the range of May of 2020 here to August of 2020, especially at a higher price range here, we should start to exercise some caution here. I think that's a very fair thing to consider. And we need to consider we are far extended away, not only from the kind of buy the dip range that we usually talk about, the 21-day moving average. That's all the way down here towards around 89 to 84 bucks. But also, as we're talking about Bitcoin potentially coming down for a 20-30% correction, this not only means that Bitcoin is potentially going to come down towards a range here in the $30,000 range for this pullback. But outside of that as well, that plays like Solana, altcoins that have remained heavily elevated and made some sizable returns could be coming down here towards their 100-day EMA pocket or 200-day pocket. It really depends. These moving averages are moving up over time. My main point here is not to give you guys some particular exact level to go in. Anyone telling you that to catch a falling knife or just know exactly because of some Fibonacci retracement or some particular indicator, this has got to be the absolute range you have to go in, is likely selling you a foolish narrative. What we need to wait for is what price is telling us. Any smart trader is going to wait for what the market tells him. And generally, I'm going to be looking to see when we pull back to the 21-day, how do we hold up there? If you feel like there's a good risk on play there, then what you can do is set up an entry and set your respected stop loss. Essentially, if the trade doesn't start moving up north and starts heading south, how much are you willing to lose? And we generally say here again, if you think that there's going to be a chance that Solana gets an you can get an entry here at say 90 bucks and it goes to 180 where you can double your money, then maybe have something like a 25% stop loss. Give it some wiggle room. But at the same time, if you're trading off these moving averages, you might want to keep it a little bit tighter here because the trend has showcased that Solana comes into the 21-day and rallies higher. And when it doesn't, as we've seen in the past, it's got a pullback in play. Right? And these pullbacks can be pretty steady from a 46% pullback. I'm not even going to include the bear market pullback of nearly 97%, but even during optimistic longer term trends, you can have nearly 80% or 66% pullbacks. So when I say that, for example, this could fail on the 21-day, and this could come down into the 100-day pocket, which will probably be somewhere up here as the moving averages are moving up, or down here, for example, right around 50 bucks, right? That's not too crazy. This stuff happens, and it's a big reason why you can't let FOMO get in the way of your perception of the market and where things really stand. Solana doesn't really have many fundamental things it's improved on during this period of time. It really isn't fundamentally worth more. All it's been is a conduit for people to speculate on meme coins. And we're seeing a whole range of other chains out there from other L1s and L2s copycatting the same trend and having new exciting meme coins that aren't $1 billion plus in market cap. And that actually leads me to talking about BONK, because I know this has been really one of the better trades in the market for those who caught it back in October or in November or early December. This play has been holding elevated above the 21-day. And this is probably one of my biggest signs here of a potential near-term top, like a short-term top in this market at a minimum, if not a long-term top in altcoins. And the reason why is because we not only had the top with the Coinbase listing of BONK, but outside of that as well, you can see here with price, we've not only closed below the 21-day, but the 21-day itself is starting to flatten out its trend, and we're not able to get price right back above there. It's not that much of a percentage gain that would be required, but it showcases here that volumes are drying up, and if anything, we're seeing distribution, we're seeing sell side pressure. So this makes me, as a potential investor, look for a much larger correction from the 55% pullback we've gone through. I'm looking for something like an 80% pullback. I'm looking for something that's going to get closer towards this price range here, the original relative highs in January 2023, and also this range in November 2023, so that hopefully that could become support. So anything from an 80 to 85% pullback on these plays. Again, you don't have to use those levels exactly. I'm just trying to give you guys a mental model. The biggest thing above all is to watch those moving averages. If you fail through that 21-day, There are other moving averages like the 50-day and whatever, but I personally think that the ones you want to watch here are going to be the 21-day for clear momentum. And when momentum fades, there is a very high probability you're coming down to one of these longer term moving averages that are already accelerating at a rapid rate and really nowhere near like the kind of crazy discount ranges some people might be fishing for, right? I think it's very common to get these kind of pullbacks. We can take a look at Doge as well when we go throughout history. I mean, not only during this kind of accumulation window, right? We've had moves, for example, where Doge rallied up here, it had a big move, and then it collapsed around 66%. But when we take a look at the prior kind of run-ups in the past, we can see back here in 2017, Doge went down around 83% and then proceeded afterwards to continue upwards around 2,800% after already making a massive sizable move here from February here into May. Now, BONK has obviously made much higher percentage returns here versus some of those moves in Doge, but this even proves my point more here that the more absorbent the gains, the more likely the heavier the correction is going to be, right? So we have to be very careful about that here. And it's just something to bear in mind here. Even here during the last bull market, we had Doge top out here and pull back around 58%, and you saw a similar correction back up here. So again, I'm not saying to wait for particular percentage points. My main point is to just understand that it can go to that extent and to watch the moving averages for nice risk-adjusted setups where you have much more potential reward than what you can afford to lose. That's how any trader who's going to walk out making money should be approaching this here. It's not about just buying something, hoping and wishing, and just going on with the narrative because, oh, BONK is funny, haha. Meme coins eventually don't become funny when you're caught holding the empty bag. It's all fun and games and all about the community until it's not, right? So that's just a key point here that I want you guys to keep in mind when it comes to trading in these different altcoins. And don't let people sell you into FOMO on these plays. Make sure you understand the risk-adjusted setup when you're making these trades. Now, I wanted to step a little bit into equities here because I think equities are telling us a really interesting story right now. So many people have been hearing about the increase in the S&P 500 and the broader value stocks. And to be fair, stocks are continuing to the upside right now, especially as global liquidity had a slight expansion over the past month or so, which we'll dive into as we go throughout the conversation. But the big thing I want you guys to keep an eye on are the prior market leaders. Okay, so these are, again, this is an important fundamental concept to understand here, that in any bull market, you likely need, especially for a long-term sustainable market that's going to make phenomenal returns, you need clear defined market leaders. These are the stocks that continue to not only outpace the broader indices, but outside of that as well are the stocks that make passive investing in the indices so worthwhile because you can even have fractional exposure to them and they just continue to multiply and multiply and multiply their market capitalization and their market share of the global value of equities. These are companies over the last decade or two, companies like Apple, companies like Microsoft, companies like the FANG stocks, companies like NVDA that have led on the new emerging trend around AI. However, while I'm not doubting of the relevance of these companies and their absolute weight and effect on the world with the technologies that they've built and the potential down the line for some of these technologies, especially in generative AI and potentially with AGI or artificial general intelligence, which has not come yet, but many people theorize could come one day. I'm not here to say if it is or it isn't. The main thing I want to tell you guys is what price is telling me. And what price is telling me here is that we're seeing a lot of insider selling. I want you to take a look down here in the bottom hand corner of the chart. And I want you to tell me, when you notice the volume candles here, what do you notice about all the big spikes of volume since back here in the summer, coming up on nearly the last 6 months? Well, what I notice here in this chart is that all of those candles where we have big trading volume are down days for NVIDIA. Or anytime we get up between this price range of 480 to around $500 per share, as NVIDIA sits at a near, I think, $1.2 trillion market cap as of the point of recording, someone is selling big time. They're distributing. This is a typical distribution pattern here. right? You had the base foundation where buyers, right? Buyers are coming in here, definitely keeping up prices. The rally continues. People think it's breaking out to new all-time highs. And right when it maybe does set in slightly new highs, within a day, within a week, sell side pressure comes in. And very big comparative to the norm, right? So my point here is that what we're seeing in the market is there was a massive repricing of NVIDIA because of the acceleration of artificial general intelligence. And while maybe, for example, ChatGPT and some of the things we've covered here on the channel really have actually been stalling, for one, that's already your worrying sign there, that there has already been a stalling on many of these applications and their monthly active users, right? But outside of that as well, like there was the optimistic narrative around how enterprise companies may utilize artificial general intelligence and how the existing technology providers like Microsoft, Amazon, Google will be able to further monetize by providing these services. It can only grow so much at this point. There's only so much available use cases right now. And I think the market has clearly priced that in. We've had some phenomenal earnings beats for NVIDIA. We had two great earnings reports where revenue was just accelerating big time and way above estimates. And stock prices didn't budge because we've seen insiders selling, people who work at the companies who are either on the board or large shareholders. And outside of that as well, the stock price itself is just showcasing stagnation, right? And we are above that 21-day right now, but we've had lots of periods of time where we stepped below the 21-day and even went below the 100-day for a window of time. Right, a pullback of NVIDIA down towards, say, the 200-day, right? If we don't get that holding, if we don't hold at that range, and this no longer becomes a buy the dip range at $400, that will not only be a 20% pullback already, but likely points us in the direction that we're coming down to the 200 week for a potential, I would say from this point on where the moving averages will move up, a potential 45-50% pullback in NVIDIA. Hundreds of billions of dollars wiped out of market cap. Might sound all doom and gloom, but there's a big gap that is likely going to get filled, guys. It's a big gap sitting here. It's been sitting there for more than half a year now, and a lot of traders are going to chase that. If they sense any signs of weakness, any earnings miss, any sign that generative AI as a narrative right now has capped out in a similar way that the dot-com bubble, right, with the internet stocks of the 1990s, definitely proved that there was something there. But it wasn't enough to generate actionable revenue. It was oversaturated. There was no real business model or clear aha moment that it was going to transform the world. And I think, to be honest, I've used ChatGPT. I've used a lot of these AI applications. AI art is absolutely incredible. It's a cool tool. Like these large language models are allowing for some really interesting niche applications. But I find it very much at the stage where the internet was in the 90s. It's still at that time a multi-decade technology that was just getting into the hands of consumers. We had some maybe slight improvements on the way we interact with these large language models, or in the case of the internet itself, the World Wide Web. But it still isn't actionable. It's not something that's going to generate tens, if not hundreds of billions, if not trillions of dollars of value for the global economy just yet. I don't think the estimations are really matching with reality. And if you use these tools long enough, you'll start to understand that. It could help with efficiency for programmers. It could help with a whole range of niche applications. And some of those are quite sizable, but I don't think that they're going to materialize to such an extent where, in the case of NVIDIA, they need to keep selling GPUs. They need to keep unloading GPUs onto the open market. And they've had a few strong quarters here. The question I think the market's asking now is whether or not they're going to be able to keep that up. And this leads me towards more the broader topic here. We just focused on NVIDIA for a little while there. I'm not going to ramble as much on these other stocks, but when we take a look at the FANG stocks, when we take a look at the two big technology companies, Apple and Microsoft, there's an important question to ask here. And I understand some people believe that these companies will be AI plays, that they're going to find their way into the market. Guys, at the end of the day, Apple is a hardware and software business. They sell phones, laptops, AirPods, different types of consumer products. And they develop the software, they make money from the App Store, etc. My main point I want to say here is that these companies have already found their market. They've already saturated their market share. Apple now has flipped red on our momentum indicator for the first time since back here in November. And it's at the same range where we faced resistance in July. So while a lot of people are juiced up about this rally, we're just back to square one to where we were back in July, back this summer. And Apple's not seeing buyers. In fact, we're seeing dojis are clear uncertainty within price. Multiple trading days here where the trend was inconsistent and is now starting to fade, right? And it makes sense. Apple is a $3 trillion company. And not to mention, it's priced at a 31.5 multiple on its earnings. Apple's a titan company. That's great. But can we justify, as we potentially go into recession, paying a 31, 32 PE multiple on this stock? How about Microsoft? Microsoft is in almost as crazy of a position. At a $2.8 trillion market cap, roughly speaking, they're trading at a 36 PE multiple due to the AI narrative. That's all Microsoft has really going for it outside of its core businesses. And the reason I emphasize the AI component, some people might say, but Nick, like, it's a cash-rich business, they're doing great, they have Microsoft Azure, they have all types of different, different subdivisions of products and services that they generate revenue and profit from. That's true, but we got to focus on the growth, because if the stocks aren't growing their income, if they're not growing their revenue, if there isn't things to look forward to, you have a much bigger problem, because you may keep the financials the same way they are. We may not even have a recession, as some people are saying. We're going to have the soft landing, as some people are calling for. The problem you have there is people are likely no longer going to pay a 30 PE multiple for these stocks, especially if liquidity doesn't return like it did over the past few years, the past decade, where there were multiple rounds of QE. If we're still struggling with inflation that's sticky above 2%, which it's currently at 3.5%, right? If that continues to play out, people are no longer going to pay a 38 PE multiple for Microsoft. They're probably going to pay a 20 PE multiple, which alone, even if the financials stay the same, means that Microsoft's going to go down substantially. Again, I'm not saying it's so black and white, guys. I'm not saying that Microsoft needs to decline that much. My point here is that just like we saw from November 2021 here to November 2022, in a year's time frame, you can see these stocks drop massively, because you might have an earnings recession. There's a very good chance of it, guys. I don't see how these stocks are going to grow. Especially, I see a lot of people rushing to the FANG stocks. I mean, yeah, it's been a great rally here, right? We've been tracking the FANG stocks here for a long period of time, the FANG index. A lot of people don't end up watching the actual broad FANG index, and I think it gives you a lot better oversight than looking at any particular stock, right? We're not about picking the absolute best performer here. We just want to know, generally speaking, when it's time to buy the dip. Well, these plays have more than doubled since back at the beginning of 2023. Up 100%. Amazon, $1 trillion plus company. Google, $1 trillion plus company. Meta, getting up there, relatively close. It's been one of the stronger ones. And Netflix, multi-$100 billion company. How do these stocks 2, 3, and maybe even 5x over the next few years? I can't give you guys that answer. I would love to tell you, because of AI or because of some narrative that it's going to do that. But what I think we've seen here is an extremely overextended rally here of a lot of people doing the same mistake that has happened time and time again. And on a shorter term time frame, one point I'll just kind of demonstrate to you guys here. It could very well be that we see a similar scenario here to what we saw in 2018, where we get real close up to that relative resistance range, and just every single time we just get knocked down. There's no serious trend, lower lows over time, and then maybe something changes, right? Maybe AI has its eureka moment, even better than when ChatGPT launched its interface towards its LLM, right? You name it, whatever it's going to be. I think that there's a good chance that this needs to cool down 100% in a year, and the biggest technology stocks, AI is not that big of a deal, guys. At least not at its current state. And that's, as someone here, I love exploring emerging technologies. I get my hands wet in them. I love getting like a hold of this technology and really trying to understand it. And I like to think about, as a pragmatic optimist, I look up and to the right. I think that there's a future here for this technology, and it is going to have massive disruptions once it has that aha moment. But I don't think we're really there yet. I think it's still a novelty for many people out there. It still has its issues. And we need to keep that in mind when we're investing. A lot of the benefits here over the past 2 months, throughout November and December, have come in the small caps and the Russell 2000. And this is the sector of stocks that I'm most interested in long term, because it makes up a whole range of new potential market leaders. There are a lot of stocks in here that will stay in the Russell 2000. They'll be small cap stocks forever, but there are a few winners here. I'm talking about 1 to 2% of stocks that are going to become new market leaders. Innovation comes from smaller scale companies. Large companies like Apple and Google and Amazon, they have great talent, they have great ingenuity to an extent, but they can only innovate so fast versus smaller cap companies, especially when we're looking towards new sectors that aren't their specialty, right? Apple doesn't build a competitive search engine to Google because it does hardware and software best. Google does search engines. Google does various types of artificial intelligence, right? So there's nuance here to understand about these companies. And it's important to understand that they're not going to remain the largest. In this case, if that argument were true, General Electric would still be the largest company in the world, or ExxonMobil would be the largest. Why didn't ExxonMobil just develop the smartphone, right? This is a very great kind of like quick way to understand here that companies come and go, right? There's ebb and flow in the market. Companies get too big for their own good at some point, and they reach the life cycle of their business. It doesn't mean that they don't remain relevant, but people stop paying the same kind of high growth premium. So I think what we're seeing here is a lot of excitement, especially now with interest rates potentially easing a little bit, right? People are starting to go for those sectors. And I do believe the small caps, like everything else, is due for a pullback here, guys. It needs to cool down here. It might rally up here 30% up towards its relative prior support range, and yet again, as in March of 2022, treated as resistance. Nonetheless, though, this is going to be your focus long term. These are where some of those big cap plays are going to start out. So we've got to know what sectors to look for here in order to capture some of those moves. That's why we've been echoing a lot, guys. If you want to, we're coming up on the close of the year here, just a couple of days away. We in the Dash Report are going to be covering these sectors. And I have to be honest with you guys here, while we think there are opportunities in crypto, if you guys come here for my honest analysis here, I'm being honest with you when I tell you that I think a lot of those opportunities are going to be in stocks. I think a lot of the 5, 10, 15, 20x multiple moves where you can comfortably put in a sizable amount of capital into various of these, variety of these different trends. They are trends that people are watching now, and instead of being multi-hundred billion or trillion-dollar companies, they're multi-hundred million, maybe $1 to $10 billion companies. And they're companies that have that foundation to be able to make those kind of multiples, to far outpace passive investing. Passive investing has been the winning strategy for the last 10 years. Once it was clear that the internet and software, the smartphone was going to be the clear trend. But until then, we got to go hunting. We got to go find these sectors so that until they start getting into those indices like the S&P 500, like the NASDAQ, and we start seeing the Russell 2000 get outpaced again by the S&P 500, we've got to continue looking for those sectors. That's a big focus we're going to have here in 2024. Now, if you guys want, again, we've kept pricing the same in the Dash Report for the last 5 years. You can get 20% off on a yearly membership. It's just $240 a year, $240 a year, less than a fraction of a cup of coffee a day. And it's a great way to not only support the free content we put out, but also get access towards our long-term portfolio, our current positions, and outside of that, get access towards the 20-page newsletter we send out every month, the mid-month webinar where we dive through the charts and you guys can ask me questions, and also exclusive market updates, as well as some brief alerts out on the market and the Dash Report discussion group. It's a huge package. We've continued to expand on the offering over the past few years. I do it pretty much all myself here in regards to the content side, in regards to getting out my thoughts on the market and where I see things going. And if you guys are interested, you can check out the link down below in the description, sign up for it. But we are going to be increasing prices very soon in 2023. So if you guys want to lock that in and grandfather that rate, you guys can do so now. It's a great way, again, to support the channel and get that additional wave of content. To close off here in the macro, guys, I just want to signal here to heed caution here in an environment like crypto, which so easily gets back into its risk-taking mindset, because there is a bias to go long here. There's a bias. There's so many ways, so many different coins, so many opportunities that it tricks people into thinking that, you have to constantly have this bullish bias here. The crypto just always goes up all the time. especially because of Bitcoin's fixed supply, or ETH having EIP 1559 and ETH staking, and therefore the inflation rate is potentially even deflationary sometimes. Don't get sidelined from the fact that global liquidity is still lower than where it was from the early part of 2023. And the Federal Reserve is continuing its quantitative tightening. It's continuing to reduce its balance sheet more and more every single month on autopilot. The Fed's balance sheet is $1 trillion short of where it was back during March of 2023, when everyone was calling for massive QE and assets, and therefore a reason to reignite and reinvest back into speculative assets. The yield curve on our momentum indicator here on the monthly has flipped blue. It's the first time since 2020 during the pandemic, right? And at a similar range of inversion, further in effect from where we were in December 2000 before the collapse of the dot-com bubble, in 2007 before the housing crash, and the collapse of Lehman Brothers and the banking system, and in 1990. And another worse thing to consider is that we're making support on the 100-day, and I think even the 200-day moving averages, which is exactly what we did here during this uninversion of the yield curve. The dollar looks oversold here and is fast approaching the 200-week, which was support last. And when we take a look at whether we want to take a look at the S&P 500 divided by the United States Central Bank balance sheet, which we're getting very close here towards the descending line of resistance since back in 2007, or if you want to take it in perspective from global liquidity, right? None of these charts look like the environment where I'm wanting to go all in with my money, right? I want to make one thing clear, guys, because I think some people, I understand if you guys don't get to watch every single video. If you've made it this far in this one, guys, I appreciate you. I love you for making the time. And I hope, if anything, if the videos prove valuable for you guys in your market analysis. But one thing that a lot of people, I think, have misinterpreted is like here on the channel, we talk about some altcoin setups, taking a little bit of risk here. We're traders at the end of the day, right? I'm a trader. I've traded in financial markets for more than 12 years. And I don't mean to say that in a bragging way or say that that means I understand how it all works. I make mistakes all the time, but I generally make more great trades than losing trades. And I've been able to build up a sizable portfolio because I've learned from my mistakes and I make sure I do my best not to repeat them. I'm human at the end of the day. You can make mistakes, but the key thing here is that my record here showcases I've been able to build up a sizable position over time. And the biggest thing I learned over the last few years is not the opportunities. It's not the opportunities that you miss that are going to crush you as a trader. It's the opportunities that you take that end up crippling your portfolio because you let emotions get to you. Right? This market rally we've seen, and I'll be the first to say it here, guys, whether it's in Bitcoin, whether it's in the FANG stocks, whether it's in NVDA, whatever, AI has been this kind of huge anomaly here. And I think it's allowed in many respects for crypto to reaccelerate in many high risk sectors because people believe that we're going to get back to normal. And many people have chased the soft landing narrative, which has further fueled fire to this. And you can have these really big breakouts, but they aren't enough to get us really back to all-time highs and continue charging forward for the next 3 to 5 years. And if that's the case, I'm really not too interested in it. I want to know when I can find those new market leaders. I want to know when they have confidence in their price, when they start clearly outpacing the market, the trend is strong, and I can hold those for the next 3 to 5 years and make returns on my existing portfolio that are going to be life-changing as my prior returns were over the last decade of trading. And if I don't have that setup, I mean, yeah, sure, there'll be some trading opportunities, as we talked about in altcoins, some short-term moves. Man, it's nothing that I'm going to be putting my capital in for years to come. Why would I? If I don't feel that the trend has conviction there, right? If it doesn't really, expand into all-time highs and signal that, hey, we've really got room to continue charging forward, then there's no reason to just sit in a position, to just hodl. So keep an eye on these momentum indicators, guys. They are your friends here. They can help you on short-term moves. They can help you on long-term moves. And again, right now things are looking bullish here, right? Things are still holding up here at the moment. But whether or not this is going to be a long-term move, I think is still up for discussion, especially considering the expansion we've already had. So anyways, guys, that's it for today's video. I hope you guys enjoyed my rambling here. If you did, consider dropping a like. As always, you can consider checking out the Dash report. You guys will get access towards our momentum indicator. You'll also get access to metrics like our global liquidity index, which we discussed earlier on in the video. All kinds of really juicy, good stuff. So if you guys are interested, check out the link down below in the description. And until then, guys, I hope you had a very Merry Christmas. And if you celebrate something else, I hope you guys had a wonderful period of time during the holidays with your family. I know many holidays are still going on, so I hope you guys have a continued great close to the year into 2024. I know we've got another video coming up on Friday, but I just wanted to let you guys know to have a great time. Step away from the charts a bit, spend some time with family, enjoy lots of good food, possibly a little too much good food, and have a good time. Take care, and I'll see you guys on Friday at 6 a.m. Eastern Standard Time. Take care, everyone.